Hello and welcome back to another video. In this video, I'll be ranking these businesses' moat and see where they stand. Let's first start with Google. Even though they're a $1 trillion company, their revenue still grows by 18%. They're also still growing their cash flows by 16%. Their highest revenue stream is from Google Search, but also they have Google Cloud and Waymo, which both of them are segments that are growing year over year. And not to mention, their margins are still even growing. My main concern with Google is search. Search is slowing down and people are now using chatbots more and more. But Google has Gemini, one of the leading AI bots right now. So I would like to put Google at the S tier, but I still don't feel comfortable with the large segment that's coming just from search. So I would put it at the A tier. We next have Hims & Her. This has been one of the most popular stocks this year. Their revenue growth is growing by 77%. They have an operating margin of 5%. My only issue is that they have high amount of debt. Hims' return on invested capital is also sitting at around 7%, coming from 37%. A few months ago, in April, Hims & Her has partnered up with Novo Nordisk. But just 2 months after, they ended this deal. Hims & Her is playing in the healthcare sector. This is a sector that faces high risk and high volatility. We also have other companies that are providing the same products that Hims & Hers provide. And for that, I would put their moat at a C. We next move into SoFi. SoFi, like Hims, has been one of the stocks that have been talked about this year so much. But as you can see, they're sitting at negative cash flows. They also recently almost doubled their capex spending. I see that SoFi has a lot of competitors in this space, especially outside the US. And also SoFi deals with consumer loans. These type of loans usually are the loans that are not paid in an economic downturn. SoFi's margins are not high. They also have negative free cash flows. And they have a lot of competitors outside the US market. For that, I would put SoFi at a C. Next, we move into MasterCard. This is one of my favorite companies. This company operates at a 100% gross margin and an operating margin of 57%. They're growing free cash flows at 16% per year, while also their net income is growing at 14%. Even though their return on invested capital has decreased, it is still sitting at a high place compared to other businesses, which is at 39%. But by far, the most growing revenue sector for MasterCard is their cybersecurity service. MasterCard is a pure monopoly. Without MasterCard, it would be really hard to have modern payments. And for that, I put it in S tier. Next, we have Duolingo. Duolingo's revenue has increased by 45%. Their gross profit margin is sitting at 72%. And their operating margin is sitting at 11%. Their free cash flows is growing by 96%, and their return on invested capital is at 28%. Duolingo is really turning into the AI learning for everything. I like the business, but I feel some threat from AI. They also don't have any high barriers of entry, and for that, I'll put Duolingo at a C tier. Meta Platforms is a stock that I hold. Meta's revenue growth has grown by 27%. They're operating at a gross profit margin of 82% and an operating margin of 43%. The stock is down right now because of their capex spending, but you can see that their capex spending is paying off. And that is because they're using this money to spend on AI models that would increase targeted ads, which means better overall revenues. Meta has half of the world on their apps. They have Instagram, WhatsApp, Threads, and Facebook. If you look at Threads, they have launched Threads out of the blue, and it gained instantly 400 million users. The fact that they have half of the world on their app is a very high competitive advantage. We now have Adobe. Adobe is a stock that has been beaten down by investors because they fear AI disruption. But when you look at their revenue is growing by 17%. They still have very high margins where their gross profit margin is at 89% and their operating margin is at 36%. And I really like how their free cash flows is growing by 22% and their net income is growing by 27%. Their return on invested capital is high, sitting at 26%. The only problem that people see with Adobe is the fear of being replaced with AI. But I'm sure as you have used AI before, when creating images, you still want to have the freedom. And Adobe does give you this freedom. Instead of prompting every time and going back and forth just to fix a small edit, Adobe gives you the platform where you can type your prompt, generate an image, and then you can still manually edit it. And this is what professionals want. At the end of the day, Adobe is made for professionals, not for me and you. So do you really think that Nike or Adidas or any other company, when they want to make an edit of a video or using Photoshop, they're going to go to AI? No, they will probably go still to Adobe because they do want this freedom. And because of that, I put Adobe at an S tier. Now we have one of the most famous stocks, Tesla. Now, interestingly, Tesla grew by 38%, but when you look at the last 3 years, they haven't been really growing that much. And while they haven't been growing, their margins have also been decreasing. And same thing with their net income and free cash flows. But by far, what scares me the most is the return on invested capital. It came from 30% to 4%. Yet, the stock trades at a 300 PE. Tesla's revenue comes from selling electric cars, but when I also look at the revenue, I see that they're not growing any of their sales. The robotaxis have been promised for years now. Until now, it's not large at scale. It's also facing heavy competition from Waymo and other companies. And for that, I put Tesla at a C tier. We next have ASML. ASML is a leader in the semiconductor industry. It really does operate as a pure monopoly, growing by 18%. And in case you didn't know, ASML sells hardware. And even though they sell hardware, their gross profit margin is at 52%, and their operating margin is at 35%. Their net income looks very attractive, growing at 19%, and their return on invested capital is still high at 21%. Really, the whole industry relies on ASML. Without ASML, Nvidia, TSM, and every other semiconductor company wouldn't be where they are right now. So when you have a whole industry that relies on you, you deserve an S tier. Next, we have Salesforce. Salesforce revenue is growing at 20%, but what scares me the most is the more AI gets advanced, the less their revenue grow, if you notice. They still have high net income and high free cash flows. Their return on invested capital is sitting at 7.5%. I would like to see this higher, more than 10% at least. But as you can see, you have a lot of competitors for Salesforce. But most of these competitors are coming out with AI workflows in their systems, which makes it more compelling to businesses. And for that, I would put Salesforce at a B. Next, we have Broadcom. Broadcom's revenues grew by 19%, while their gross profit margin is sitting at 67%, and their operating margin is sitting at 40%. Their return on invested capital is at 16.8%. Its competition comes from other tech giants. I would put Broadcom at an A tier. And you know what? I'm actually starting to think more about it. I think Google should be in an S tier. Next, we have AMD. AMD grew their revenues by 23%. Their operating margin is sitting at 8%, and their gross profit margin is sitting at 48%. But you can see AMD doesn't have consistent free cash flow growth. They have a return on invested capital of 4.8%. AMD competes in a brutal market. AMD lives in CPUs, GPUs, and AI accelerators. And these are markets where competition is consistent, pricing pressures is real, and technology cycles are fast. AMD wins mainly by better engineering at the right time and smart roadmap execution. That is skill, not a moat. AMD's margins are also strictly capped. I would not put AMD at an A tier because usually A tier companies have strong switching cost, network effects, control over standards, and platform ownership. AMD does not have any of this. So that's why I would put AMD at a B tier. Next, we move into Costco. Costco's revenue grew by 9.7%. But as you can see, Costco's revenues are low. But that's not really a problem here, because Costco's main goal for their customers is to give their products at the cheapest price. And they do this by their subscription, which is why you can see that they always have recurring revenue. I really think that Costco is an S tier because their membership model is a monster moat. Costco is not a retailer first. It's a membership business. Members pay upfront every year, and their renewal rates are around 90%. That creates recurring revenue, customer lock-in, and predictable cash flows. They also have extreme trust with customers. Costco's brand is built on one promise: will not rip you off. And they keep promise to that. Another thing that Costco has is that their competitors cannot match their scale. Costco's buying power allows it to force suppliers to accept lower margins, offer prices that others cannot sustain, and also maintain quality while staying cheap. But really, Kirkland is their hidden weapon. Kirkland is one of the strongest private labels in the world. Customers trust Kirkland as much as the national brands, sometimes even more. This gives Costco higher margins and supplier leverage and brand loyalty. And because of that, I really give Costco an S tier. Next, we have Amazon, a company that we all have used. Amazon has a revenue growth of 21%. Their gross profit margin is at 50% and their operating margin is at 11%. Their return on invested capital is 11.4%. I'm sure we've all seen this. Amazon is really tapped into every market. But Amazon is not just an online store. Amazon is also a third-party seller service. They have AWS, which is the leading service for cloud computing right now. But by far, one of their services that I think is very valuable is their advertising services. I believe that out of Amazon and Google and Meta, Amazon is the best if you want to put your ads there. Because if you think about it, when you shop at Amazon, you're already shopping because you want to buy something. You already have a buyer's mentality, unlike Meta and Google. So this makes it easy for companies to list their product on Amazon and to get a high click-through rate. They also have their subscription service, which is recurring and customers love it. Plus, they also have other hardware products. Amazon has a logistic moat. Amazon really have a huge logistic moat and also different revenue streams that makes it defensible against competition. For that, I'll put Amazon at an S tier. Next, we have Lululemon. Lululemon grew their revenue by 18%. They have a gross profit margin of 58% and an operating margin of 22%. The return on invested capital is at 29%. You can see that it decreased from 50%. Lululemon operates at a market where they have lots of competition from other companies like Alo, which has been eating a lot of their market share. You can also see that once Nike was a leader, we'll touch on this later, but once Nike was a leader, so you can see how this fashion and athleisure industry is very open and almost has no moat for any other company. And for that, I would put Lululemon at a D tier. We next have Nike. I just touched at it a few seconds ago, but I'll also go over it. Nike's revenue has not been growing at all. It grew by 3.8% year over year since 2016. And also you can see that their margins has been decreasing. Their gross profit margin went from 46% to 41%, and their operating margin went from 13% to 6%. Their return on invested capital went from 39% to 12.6%. Nike faces competition from Under Armour, Lululemon, Alo, Reebok, Adidas, and many other businesses. Their margins has been decreasing and their revenue has not been growing at all. To be honest, if I had something lower than D, I would put Nike. So for that, I would put it right in the middle here. Now we have Netflix. Netflix grew their revenue by 20.9%, and they have been also consistently growing their margins. You can see that the gross profit margin is sitting at 48% and their operating margin is sitting at 29%. Their free cash flows and net income has been all over the place, but recently it has been consistent. The return on invested capital has been increasing from 3.9% to 22%. But you can also see how the streaming market grew. In 2007, we had Hulu, Netflix, and Prime Video. But in 2021, we had way more than that. Netflix is operating at a market that is filled with competitors. I myself have cancelled my membership because if you are a Prime member with Amazon, you get Prime TV for free. But aside from that, I just enjoy more Prime TV and Apple TV. I noticed that Netflix has just little shows, and mostly when they bring something new, it's not actually new, it's old. But I noticed with Prime TV and Apple TV, they have way better shows and movies, newer movies, and at the same time with better actors that I enjoy watching. And not to mention, you still have other free streaming services and websites you can go for. And for that, I put Netflix moat at a C. The company still has their own shows, which does give them a moat, but other shows that they bring on that's not made by Netflix are old and not interesting like other streaming services. Next, we have Uber. Uber grew their revenue by 33%. Uber has an operating margin of 9.2% and gross profit margin of 39%. The return on invested capital is sitting at a pretty nice place, which is 23.1%. You can also see that Uber went from a cash burning machine into a cash printing machine. The only concern that you really can think of for Uber is autonomous vehicles. But I see Uber making partnerships with other companies to have autonomous vehicles on their platform. And also when you think about it, Uber is a global term right now. Back then we used to say let's just take a taxi, but now we just say let's take an Uber. Uber is also operating globally, unlike Tesla, specifically in the robotaxi segment. Uber also does not manufacture any of its cars. They rather just partner with other companies. When you think of Uber, just think of it as Amazon but for driverless cars. But also, unlike other companies, Uber has a lot of other things like ride, reserve, rental cars, food delivery, courier delivery, and groceries. I believe this makes Uber's moat even more stronger. Uber has around 180 million users that use it monthly. Their only risk right now is the execution. If they can get even more partnerships and have more autonomous vehicles on their app, I think this would increase their margins and not make investors worried about autonomous vehicles, especially coming from Tesla and Waymo. For that, I would put Uber at an A tier. And finally, we have Apple. Apple's revenues has not been growing that much. It grew by just 5.6%. And I think this has a problem with their creativity and making new products. But still, their operating margin is high and matter of fact is still increasing. And this is because of their software services. Their gross profit margin is sitting at 46% and their operating margin is sitting at 32%. Their return on invested capital is at 36%. So saying all that, I think Apple does have a moat, But I think it's also at a very risky place where they do need to innovate and make new products that are actually different than what we have before in order not to lose this moat. But at the end of the day, if you have an iPhone, you likely have a MacBook. If you have a MacBook, you likely have an iPhone. They really built their ecosystem where it's so compelling that once you have it, you can't leave it. So I would put Apple between A tier and S tier, but because really what gives them this S tier is their ecosystem that they have. But also where I don't want to put them fully at an S tier is their lack of innovation. But actually, you know what? While we are at it, let's also rank Nvidia and Microsoft. Nvidia has been on a parabolic run. The revenue grew by 45%. I mean, look at this. They went from 9.7 to 187. Nvidia also has monster type margins. Their operating margin sitting at 58.8% and their gross profit margin sitting at 70.1%. The return on invested capital is sitting at 124%. I think this is the highest I've seen. This might not be sustainable for the future, but certainly this is very impressive. While we all know Nvidia from their amazing chips and high demand for it from every other company wanting to purchase their chips, Nvidia is also playing in the autonomous vehicle sector, which this alone is a huge sector. They partnered with Uber to launch autonomous vehicles at scale. They want to be the brains that makes this happen. Recently we saw that Meta wants to buy from Google their TPUs, and this raised some fears for Nvidia's moat, but I still think that Nvidia's moat is super high still. They have the Coda software, which is this really builds the moat for them. They're high margins, they're in high return on invested capital. Nvidia needs to be at an S tier. Next, we have Microsoft. Microsoft is really one of my favorite companies. I do own this stock. Their revenue grew by 13.4%. They're the type of business that is really consistent with their revenue no matter how the economy is doing. They have high margins. Their gross profit margin is at 68% and their operating margin is at 46%. Their return on invested capital is at 20%. The return on invested capital has decreased a bit, but overall it's still sitting pretty nice at 20%. Microsoft's revenue segment is incredibly diverse. They have LinkedIn, they have Azure Cloud, which is growing rapidly and even taking some market share from AWS. They also have GitHub, which every second it adds a new developer, but by far the most sticky business that they have is Office 365. Every business needs Office 365, and even in a recession, there's not one single company that's just going to be like, let's cancel it. It's really a product that is embedded in every company. So I think Microsoft is an easy S tier company. This is it for this video. I believe in this ranking. I think this is a good ranking right now, especially for the state of every company that I have. Let me know what would you change here, and do not forget to like and subscribe. See you in the next video.